Good afternoon, everybody. Nice being on the call with you guys once again. Hope all of you are safe and healthy and sound. The times are tough and the measures that one has to take to be safe and healthy is tremendous, and that is the reason I'm asking this question. We normally come out with our financials sometime in the month of April, maybe towards the third week or fourth week of April. This time, for various reasons known to all of us, there has been a delay, and but still we feel that we are among the first ones to have actually come out with the results. Just wanted to first touch upon the numbers before I would ask Madhu to chip in also. This was possibly one of the most troublesome quarters that we have envisaged. We have seen for a while, and the basis that the disbursements were pretty low. It was at about 347 odd crores versus 465 crores that we did in the immediately preceding quarter, which is a 25% drop versus the immediately preceding quarter and about 43% lower than the same quarter last year, when we did about 605 crores. The loan book, the overall loan book was at about 2,650 crores versus about 2,751 crores at the end of the immediately preceding quarter and about 2,741 crores that we did about a year back. So there is some bit of drop, but the times are such that staying afloat was more critical, and being conservative was even more critical. The total interest that we generated in the current quarter was about 146.8 crores versus 150.9 crores in the immediately preceding quarter, which is a drop of 3%. But versus the same quarter last year, there was a 7% increase when we did about 137 crores. The finance expenses compared to the immediately preceding quarter was lower by about 2 crores at about 56.2 crores, which was 3% lower, but slightly higher than the same quarter last year when we did 48.9 crores. The operating expenses compared to the immediately preceding quarter and also the same quarter last year was lower on account of 3-4 things. Was lower on account of 3-4 figures. Give me a second. It was mainly on account of the collection and the sourcing expenses going down. Sourcing going down because the disbursement was significantly lower. The collection expenses had gone down because normally the outside collection, that is what is not collected at the FinCorp branches or what is not collected through NACH by the collection team and also the collection agencies, that normally happens in the last 10 days of the month. And that was a total washout. Post the 22nd of March, there was as good as no collection. We collected about 2 crores, when even in the preceding month, in the 7 days, we collected between 22nd and 29th, we collected close to 40 crores. So I'm saying that was the kind of drop which actually brought down the collection cost, but at the cost of a lower collection itself. On the other cost, the total figure, therefore the operating expenses were lower compared to the immediately preceding quarter and more or less just slightly higher than the same quarter last year. The loan loss provisioning saw a jump up mainly on account of an additional provisioning that we had done. We did a provisioning of about 18 crores in the current quarter on account of the expected issues that COVID-19 would bring up, and therefore we made higher provision to the extent of about 18 crores, and therefore the loan loss provisioning figure was
Participants, it seems that we have lost the line for the management. You are requested to please stay connected while we reconnect them again.
Hello.
We have the management line now reconnected, so you can continue.
I don't know where it got disconnected. So do you want me to start all over again?
No, I think
where did it get disconnected?
loan losses के वहाँ से आप चालू कर दीजिए.
Hello.
Provision से चालू कर दो. वहीं पे कटा था.
Now we were talking about operating expenses where in the current quarter versus the immediately preceding quarter there was a drop which was on account of two factors, which was collection cost and the sourcing cost coming down. But in this quarter, one thing which we wanted to emphasize upon was that we have made an additional provision of about 8.66 crores, which is on account of a contingency, which maybe as we go forward, we'll talk about it. The loan loss provision at about 22.5 crores includes a figure of about 18 crores, which was an additional provision made by us in view of COVID-19 and the impact that it could have going forward. Based on all this, we arrived at a total profit after tax of about 13.6 crores versus about 19 crores that we did in the immediately preceding quarter and 22.7 crores that we did in the same quarter last year. Here we would want to emphasize on the fact that had COVID-19 not been there, had the additional provisioning of 18 crores not been needed, had the additional contingency of 8 crores that we are the 8.66 crores that we mentioned about, that not been there, the PAT would have been 33 crores in the current quarter. And much better even versus the same quarter last year. On a full year basis, we did a total disbursement of about 1,788 crores versus 2,135 crores that we did in the last year, leading to a total revenue of 587 crores versus 519 crores that we did in the previous year, which was an increase of about 13%. The finance expenses did go up significantly at about 227 crores versus 179 crores, a jump of about 27%, which was mainly on account of higher utilization of close to 280 odd crores of funds. And second would be on account of the increased cost, where the overall cost went up from the full year cost last year was about 9.6%. This year it was about 10.3%. So that was the reason for the increase in the finance cost. The operating expenses was higher by about 22%, which was, I would say, mainly on account of the collection expenses and the higher provision of 8.66, which we mentioned we had made. The loan loss provision was higher by about 53% at about 70.7 crores versus 46.3 crores that we did in the last year, which we spent in the last year, which was included in the current year. The figure included is 18 crores. If that is removed, I think it would be more or less slightly higher than the previous year, not more than that. Based on all these things, we did achieve a bottom line of about 60 crores, 60.2 crores versus the 86.3 crores that we did in the immediately in the last year. here we would want to mention one thing that this is the year when we have moved to India, and whatever figures we are talking about for the previous year, they have been adjusted to bring in line with the India. How do we see the future? I think I would just ask Madhu to maybe talk about it, and then we will take the question after that.
Good noon once again to all of you. I'm really delighted to connect back with all of you, and thanks Antique for organizing this call. I'll take through some key numbers in terms of what is happening in two-wheeler industry, and then probably I'll cover what MCSL did while the lockdown happened, and a bit of how things look like as far as MCSL books are concerned, and then probably we can get into Q&A after that.
Yeah.
After that we can get into Q&A. If you recollect, for last 1.5 years after the ILFS story, and then Supreme Court coming out with mandatory 5-year insurance for for the auto, for the cars and two-wheelers, we saw that the two-wheeler industry coming down, in fact auto industry coming down, and last year what we have seen is there was a drop of about 18%. The total sale for two-wheeler was about 1.74 crore last year, which was about 18% less. There are various markets where the dip was slightly more compared to certain other markets, but overall it was 18% drop. Good thing is that MCSL maintained its market share. We were close to 1.6% market share on a all India basis, but wherever we operate, we were slightly better in terms of market share. In terms of finance share, we were at 4% plus all India basis, but in specific markets, we had a slightly better market share. So good thing is we maintained the market share. Our disbursement, our two-wheeler disbursement drop was 8% compared to last financial year. So again, versus industry, we did slightly better, though it was lower than the previous year. In fact, if we were to dissect our book, we have kind of aligned our book with the current COVID situation. We have close to 70% of our areas which is in amber and green. In red zone, only 30% of our portfolio exists right now, or the locations where we operate, only 30% is in red zone right now, and others are in amber and green, which means slowly things are becoming normal. So from book perspective, almost majority of our book is now out of red. When the lockdown happened, actually, the entire MCSL team was put into some kind of learning and development. Entire workforce went through a certain orientation program and online tools, because we thought this was the right opportunity, and immediately after the lockdown it was an opportunity for people to improve their learning and development, which we did. And then entire team was redeployed for very clearly planned out activities, which included focus on collections. Once the moratorium was decided and the customers who didn't opt for moratorium, we reached out to them. So we had a customer connect program in which every employee reached out to customers allocated to them, not only to know know about his well-being, but also educate him in terms of digital modes of payment, which we were providing in terms of our app and through Paytm and things like that. So we educated them on that. Besides that, we clearly aligned our focus on two very important things. One was how we reach out and channelize the collections because no one can go to field, and second was on cross-sell. How we are different from any other two-wheeler company or any other auto finance company is that we have our flagship company, Muthoot FinCorp. We opened, all of our branches got opened by the third week of April. So we had a very early advantage in terms of helping the customers in terms of offering them the gold loan and, during the final financial distress, we helped the customers to reach out to MFL branches and get the gold loan. So cross-sell was one key thing we started in the month of April while the lockdown was in full swing. So redeployment of manpower happened immediately as soon as the lockdown happened, and the entire team was engaged. Almost 90% of our team was involved in totally focused on customer connect programs, calling customers every day. Almost 200 customers are assigned to each employee. And they have the entire month to call those customers. We have a significant improvement in the month of May. When we come to our cash collections, we'll kind of describe at that point in time how these efforts are bringing in great benefits to us. So key focus had been, how we redeploy our manpower, which we did in April. There's a good improvement in terms of our collections from the field through digital means, through our branches. And then the cross-sell was key, on which gold loan was a product that we thought we'll pitch in so that during the financial distress, we can lend a helping hand to our customer. And we were focusing only MCSL customer base. We have close to 7 lakh live customers, and about 5 lakh customers were allocated to 2,500 employees. We reached out to them. And of course, as we go forward, we have the opportunity of FD fixed deposit collections in Kerala, which we have started kind of publicizing that. That's a cheap cost of funds for us. And on digital push, there are a lot of initiatives that were there which we brought into foray. Digital push is happening, especially on the credit piece, where we have enhanced our straight-through processing. I had told a couple of years ago that we are getting into our own scorecard, we are getting into our own straight-through credit process, which we have enhanced now with a lot of other checks, especially in terms of the impact that COVID is bringing in. We have brought in a micro market concept. The focus would be on red, amber, green area, and then basis that the credit decisioning happening. So a lot of things have happened on that, and that is happening through a digital process that team has already done. They have piloted that, and then probably from once we restart our two-wheeler business, probably that point in time we'll be able to do it. So this is about what we have done after the lockdown, and there would be many questions in your mind. When we open up for Q&A, I'll try to explain, what is the strategy or what we had been doing. I think to start with, I have so much, and then while we discuss, we can elaborate more on what we are doing and our strategy. Bhavik, if we can open for Q&A, I'll be very happy to address the queries.
Sure, sir. Sir, can we open it?
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the queue assembles. To ask a question, please press star and 1. The first question is from the line of Krishnan PS from India Advisory. Please go ahead.
Thank you very much. Good day to the Muthoot Capital management team. I just wanted to get an understanding, even pre-COVID, on account of slowing down two-wheeler industry, our company's growth, margins, return ratios were a bit moderated as compared to the previous years. So I wanted to get an understanding, what is the management vision, strategy and plan over the next 2 to 3 years to grow the loan book, increase profitability and return ratios? And in your sense, what do you feel are the growth triggers for Muthoot Capital going forward, and what are the potential risks, and how is the management addressing these growth-related risks?
Krishnan, good afternoon. Vinod here. Maybe a very difficult question to answer at this stage, because maybe pre-COVID, if we had spoken and we had a plan in mind, we could have explained that to you. Maybe post-COVID, till the lockdown gets lifted fully, till the time things start getting to normal, it may be very difficult for us to possibly put a number and say that this is the figure that we would achieve the current year, and the basis that this would be the growth over the next couple of years. We would ideally want the things to open up to say that no, when would we actually be in a position to start disbursing, and then only we can possibly answer this. This time, this may not be the most appropriate time to possibly try and answer this question. I'll possibly wait to hear what is your view on this.
Actually, quite unreasonable for me to ask you a number, but no, I'm just looking at a kind of a broader vision or a strategy that you have over a 2-3 year period in terms of where you would like to see Muthoot Capital.
On the broader vision, maybe then I would possibly try to tell that what was our plan when we discussed last quarter. We were looking at growth. In fact, in the current year itself, we were looking at a book of about 3,000 crores, going to close to 37, 50, maybe 20-22% kind of growth next year, and then going to about 4,500 the year after. Today, maybe all those are possibly on a Excel sheet only. Currently, we were looking at two-wheeler. We had got into used car, and that was something which we were planning to make big. We were looking, and we had completed our entire processes relating to consumer durable, and that would have possibly given us a increased volume over the next couple of years. That may not be in FY21, but maybe in FY22 and 23. So these were 3-4 things that was already lined up. In fact, the first two which I mentioned about, the first one is, I would say, totally available in about 21 states. The second one is currently in only about 5 states and in about 18-20 locations. So we are saying that that was there on the agenda, but maybe may not be appropriate for us to take that as the base and start work and decide on a number today. That's the reason we would not want to answer it in detail. Maybe we can discuss a lot possibly offline.
Krishnan, to give you some more leads to what Vinod said. One is, what is the upside of MCSL, and we've been telling that MCSL is a single product company which can add new products, and so there's a widening of product lines that is the opportunity that we have, and that's why we said we'll do used car. Basically, who is our customer? As a group, as a Muthoot Capital Group, we believe that common man is our customer. We talk about bottom of the pyramid as our customer. Our branches, Muthoot Capital Group, MFL has 3,500 plus branches. We have, reach of more than 7,000 touch points, but these are majorly in tier 3, tier 4 centers. Okay. And these are the places where new to credit customers are more, and if you are able to build your distribution properly there, you have a huge opportunity to build there. So the upside for Muthoot Capital is, one, widen the product line. B, that is the second piece, is that how we increase the penetration as far as two-wheeler business is concerned. So we were in very limited geography, which we expanded. I said we protected our market share. Our overall market share in overall total sales of two-wheeler is 1.5%. Even if we are able to build some 0.3, 0.4 extra, it brings in a lot of top line for us there. Increase the penetration in two-wheeler. Another important thing that is there here about two-wheeler industry is that with the change in Euro norms, with the increase in cost of insurance and things like that, we expect that the finance penetration would go up. Currently, last year or around that, it was around 37%, 38%, which would go up. So on the overall volume, the total sales that happen, the finance penetration, when it goes up, the number of vehicles available for finance may not drop so significantly like the industry sales is going to drop. So if you ask me what is the sale in the next year, it's difficult to predict right now, but whatever number happens next year, the finance penetration goes up. So as far as finance companies are concerned, they'll have a significant piece of business available to do, okay, to really go and tap those customers. And I said we are in tier 3, tier 4 centers with a lot of people migrating back to their original native place, and the likelihood that they continue there and then they start working there. So we see that we have a huge opportunity that we would not have a lot of migrant people which we were earlier averse to doing business with. So there's a huge opportunity that would come in tier 3, tier 4 centers as we go forward. There would be a lot of local business coming up. There would be local employment coming up. Local cash flow, local economy is going to improve, that level. So our future strategy would be, at micro market level. I said in the, in the starting point, micro market. We'll go too deep into the market at pin code level, at district level to understand the economy, and that is where the opportunity lies. So we say that in two-wheeler, still there's a huge opportunity that would come once the lockdown is eased out and the COVID threat kind of wanes off, let's say by September, October. We see that there's a huge opportunity that would be there for the two-wheeler business. So from perspective, what Vinod said pre-COVID, this is what we were trying to tell and do. Post-COVID also, I see that that opportunity would still exist. We have lost a quarter, that's the issue, but the pent-up demand and the local economy, how it booms, would really help the sales to go up. So this is the limited feedback that we have.
Sure. Thank you very much, both Vinod and Madhu. Another question which I have is, what's your loan book split between two-wheeler, used car and business loan?
Loan, used car and two-wheeler, both together would be about 95%.
Okay. And
we said was about 2650.
Okay. And then would you also be in a position to give what is the total write-offs, net of recoveries and repossession or any sale or auction for FY20?
There has been no write-offs in the current year, but repossession, loss on sale of repossession, we repossessed and sold about 10,200 odd vehicles, and the total charge to P&L was about 26.9 crores.
Okay, fine. All right. Thank you very much, and my best wishes to you and your team. Thanks for taking the question. Yes.
Thank you. Next question is in the line of Umang Shah from HSBC Securities. Please go ahead.
Yeah, hi. Good afternoon. Thank you for the opportunity. I just have a couple of questions. One is on your outlook. Now, I can understand it's pretty early, but then if you could just give some early indicators in the regions where your offices have opened up in terms of customer walk-ins and any inquiries. Have you seen any pickup or any change in customer behavior which is quite noticeable recently?
So, dealers are just becoming operational in a very restricted way. In fact, there are a lot of areas where dealers cannot operate more than 35% of their capacity. The May month is going to be like that, but we believe that from June, July, things would pick up for them. In terms of change in customer behavior, or you wanted to know the feedback about customer, we did study with various dealers across the country. Our team went and met a lot of customers, prospective customers. I personally went out to few dealerships and met few customers. I assessed their inquiries and what kind of customer profiles are. We see that there is a definite change in the customer profile that is now walking into the dealerships. We are seeing the quality of customers slightly better than the previous times. And these customers are basically coming for the purpose that they want to avoid the public transport, or public transport is not available. And from the fear or from the anxiety perspective, from the safety perspective, they are coming and buying. So we see that the customer segment that would buy in from now on till, let's say, August, September, October, would be the customer who are the serious buyers, which means a lot for them as far as two-wheelers are concerned. And we have seen the profile of customers, like most of the customers would have some income proof, they'll have some business, they'll have income tax returns. So we are seeing that from a formal sector, a lot of customers are coming and buying. So that's a positive part of the whole thing. And once it opens up, I think the overall opportunity would be visible, because there was a segment which used to use car, or which used to use public transport, metro and things like that. They'll come into two-wheeler buying. In fact, safety concerns would definitely drive the customers next, I think, at least 1.5 years. Because this was a dormant need of the customer. Dormant need in the sense that they used to think that I should have a two-wheeler, own a two-wheeler, but because there was a convenience of other modes of transport, they used to use that. So affordability was not the problem. The problem was that there was slightly more, convenient or cheaper way of, now with COVID, definite shift would happen from public transport. So we are seeing that there are very positive trends that would come in, but initially the volumes, as of now, the volumes is not justifiable, but as we go forward, we'll have a bigger chunk of customers from the formal sector.
Great.
You wanted a number also. See, my assessment is that it's very difficult to tell right now, because as on Q1 it is total washout. Okay, and I am expecting that this 1.74 sale that has happened this year may come down by around, let's say, about 20-25 lakhs. It would rest around, let's say, 1.5. But please remember my initial input to all of you, which you should definitely keep in mind. The finance penetration is going to go up. I said formal sector is coming into buying two-wheeler. People who never thought of buying two-wheeler now started buying two-wheeler. So finance penetration would go up. So the overall segment that is available to finance companies would remain constant. So from financing perspective, that is a feedback. Sales, definitely I'm expecting it to be around 1.5 plus minus something. 1.5 crore.
Yeah, this is quite helpful, sir. This is quite helpful. And a related question was the point that you made that the finance penetration should likely go up. So based on your conversations with the OEMs, are they planning to step up or kind of share some of the financing burden, or maybe are they increasing the subvention benefits to the financier or something of that sort that you're seeing?
I think in two-wheelers, generally subvention or things like that doesn't help. So I'll give you one more, indicator to that. In two-wheeler, 60% of the customer or 65% of the customer buys in cash. So affordability is not the issue. Okay, now with the new customer coming in, and another input is that the prices are going up, because from Euro 4 to Euro 6, the prices are going up. So a lot of cash customer would start shifting into taking finance. So subvention happens in a segment where the pricing is very high and you have to bring affordability on the table. In two-wheelers, affordability may not be that big challenge. In two-wheelers, the issue is how soon, how fast, how quickly you can, turn around the loan and deliver the vehicle to the customer. That is where the game is.
Understood. And sir, my last question is on the moratorium. So So in your presentation, you have clearly mentioned that you have extended moratorium, but then what proportion of customers are currently availing moratorium, and on the extended moratorium, which has got announced last week by the Reserve Bank of India, what's your take on that in terms of do you see any risk to the customer repayment behavior, and would you proactively offer the extended moratorium to your customers, or is it on an opt-in basis? How would that work?
Umang, Vinod here. See, maybe a difficult question to answer on how many people opted for moratorium. See, we did have a process sometime in the first week of April where we actually sent the SMS communication to all the customers asking whether they are interested, whether they want to opt for a moratorium. And we received a very small number of people who said yes, some said no. And whatever the number of people who didn't say, for the people who said they don't want and the people who didn't say anything, both these cases we had actually uploaded the NACH mandate for collection. We did get some bit of collection from the NACH mandate from the bank, and thereafter post the 20th of April, once the Muthoot FinCorp branches opened, we could see a lot of customers actually walking into the Muthoot FinCorp branch and making the payment. So between the NACH and the cash collection, roughly 215,000 people actually made the payments in the month of April. The normal number which makes the payment in a single month is roughly 600,000. So we can safely say that roughly 33-35% people paid, and the balance 65% opted for moratorium in April. In the month of May, the situation seems to be different, seems to be even better. And the way things are going, we hope to see about 300 to 315,000 people making the payment in the month of May by the end of the month, and which would be around 53-54% of the total number of people who normally make payments. So we can safely assume that in the 2 months of moratorium, the moratorium was declared much later, towards the fag end of March. So that may not be the right month to look at. The April, May would be an appropriate month to look at the moratorium, when how many people opted for moratorium. So we can say that the number of people who are opting for moratorium, that is reducing. I think one of the main reasons for that is what Madhu did mention to one of the calls, one of the participants, that we have put our entire team for following up for collection. So whoever has not opted formally for a moratorium, those cases we have gone ahead and started calling those people to come and make the payment. Many of them are coming and making the payment. May was a month when I'm saying that we were 300 to 315,000, about 54% people would make the payment. We expect June to be much better with the lockdown getting lifted. In spite of an additional moratorium period being announced, we still see that the number of people who actually pay in the month of June would be far higher than the month of May. And we should possibly, we believe we are getting back to normal. It could be 2-3 months a day. Your specific question on what is our plan for the moratorium which has been announced and which is being extended, we would continue to be following up with the customers, maybe in a subtle way, maybe in a very polite way. And customers have been loyal to us. Customers have been with us for the last for a long period, maybe either directly with us or with one of the group companies. And therefore, the call that goes from our executives to them is well taken by them. And many times there are promises to pay, which gets they come and make the payment the next day, the day after that. So we believe that we would continue in spite of this. We don't intend to, as of now, to go to the customers like we did in the month of April. Go to the customer and ask them that, do you want a moratorium?
So just to give an additional input in this, because a lot of people may have questions around this. When I said we redeployed our team into collections, we had close to 2,521 people calling customers, and about 4.77 lakhs accounts were allocated to them. But in the zero bucket, that is people who have not paid in the current month, but they were regular, was about close to 2.6 lakh customers were there, of which we are expecting about 1 lakh repayment. 75,000 already we have received. Another 25,000 because it is month end, between today, tomorrow, day after, we are expecting that. So what we are saying is that we are seeing a substantial improvement in customers coming forward and paying the installments. So, the fact that whether moratorium is something which is a hard rule that would play in the mind of the customer, I don't think so. As the lockdown opens and customers come back to action, they come back to work, they come back to open their small businesses, they'll come out positively and pay the installments if we are able to reach out to them. So we are seeing that trend this particular month. Another very important thing, what is the impact of the lockdown on the customer? As I said that we focus on the common man. For the common man to bounce back, he doesn't need a lot of paraphernalia. If it is a factory, then you need the laborers to come back, you need supply chain and things like that. Our customers are not like that. They are just people who can, if they have to open a coffee shop or a tea shop, which they were, during the lockdown, they have to close down. To open that, they don't need actually anything. I mean, they can come back and start working as soon as, the government allows. So we think that these customers would bounce back much faster in our economy than any other businesses or any other, people from the formal or informal sector. So we feel that the strategy of reaching out to customer proactively, talking to them, collecting the money, asking for collections is a good thing to do, and we have seen a very positive response this month. As we go forward, and Vinod also said it would be a couple of months that we believe that it should come back to normalcy.
Yeah. All right. Perfect. This is great, sir. Thank you so much, and wish you all the best.
Thank you. Thanks.
Thank you. Next question is from the line of Nikhil Valecha from Concall Mutual Fund. Please go ahead.
Yeah, thanks for taking my question, sir. Sir, on slide number 5, you have mentioned that in corporate loans, you have received 25% of collections in April. My question is, who are these corporates who are not paid, and is there any corporate NPA on the book? And thirdly, how will you go about collecting from the remaining 75%?
No, the balance of the cases, Nikhil, where we have given moratorium, where they have sought moratorium and we have given the moratorium.
So, are there any corporate NPA right now on the book?
There is, which is a part of our total, which is about 10.53 crores, and which has been provided for.
And what are the corporates? Are these MFIs or some other corporate?
One is an MFI, the other is into used TVs.
Just 2 accounts are there, right?
Yeah.
You have availed moratorium?
No.
And
No. That moratorium, there are many. You asked me about the NPA.
Oh, no. I'm asking about moratorium. So what kind of accounts are there?
No, it is, I would say it's a combination of all the sectors. MFIs are there. Then there would be two-wheeler guys who own their finance. Then there would be SME, MSME kind of customers. There would be customers who, vehicles would be not only two-wheelers, would be other vehicle loans also. So that it's roughly about 40% of our total corporate book. So
what I'm reading from various reports like Sadhan and all, the weaker MFIs which are less than 500 crores, they don't have enough liquidity for next 2 months, and they're likely to struggle. So of this corporate NPA, what is your expectation? Like how much further slippages are you expecting?
We are not expecting any slippages. We are speaking to, or we have spoken to most of them. In fact, each one of them that we have spoken to, they are pretty confident about bouncing back. In fact, most of them have restarted their collections. In fact, there are many of them who, in fact, they are in possibly much, I would say, worse areas than maybe we have our businesses in. But most of them are saying that they have started collections and they are expecting about 50% kind of collection in the month of May during the moratorium period. So we are pretty confident about the account.
Okay. And similarly, on the same slide, you mentioned that current resources are engaged in sourcing gold loans for on-book disbursements. So I'm really not getting this. Your resources are sourcing gold loans, so I'm not able to get this part.
No, what we have said is we are sourcing the current resources are being used for 3, 4, 5 things we have said. Currently, it is being used for sourcing gold loan for FinCorp. As we go along, which is essentially a kind of cross-selling. We would look at maybe using them if we decide to have it on our own books, to use them for that also. That's what we meant.
So you are, so it's very difficult to understand, like your resources are cross-selling for Muthoot FinCorp, because I thought it's for the other way around, that the FinCorp was using its resources to sell two-wheeler loans.
So I'll elaborate this in a very succinct way. When business as usual pre-COVID, MFL used to source two-wheeler business for us. Okay. Now, because two-wheeler business is zero, MCSL team is reaching out to their customer base for various things, collections, for many other initiatives that we want our customer to do. For example, make the payment through digital means because customer is not ready to come out of his house and things like that. And then one of the things that we thought is that we'll do cross-sell. In the cross-sell, what are the products we can sell? One of the product is whether we can source. So I said that the Customer Connect program was basically to know the well-being of the customer and also understand if he is having any kind of financial distress. So we said if you have a financial distress, we would be able to, or we'll be able to facilitate gold loan from our flagship company. Okay, so right now when we do cross-sell of gold loan, the customer is directed to the gold loan branch, MFL gold loan branch, and there the necessary process would happen and things like that, and we have a payout arrangement with the MFL. Okay, this is the first product for the cross-sell. The second product is now we have launched general insurance cross-sell because the renewals are due for the customer. It is difficult for customer to go out and take the insurance of the vehicle. So we have worked out a digital process along with our empaneled insurer to insure the vehicle of the customer so that he's driving the vehicle with insurance, with comprehensive insurance. The third version of the second version of gold loan that we think we can do is that can MCSL book some of the gold loan business in MCSL book itself for the existing MCSL customer. MCSL historically had been doing gold loan, and some point in time we stopped. So we can restart. That's one way of looking at it, because right now the sales of two-wheeler is zero, so we can look at doing that in our book. There is no clash of any customer because these are our own existing customer. The gold loan process can be outsourced with MFL. So they can outsource that and they can process, do all the due diligence and things like that. And then, MCSL can disburse that. MCSL would do the collections and things like that. So one way of creating some revenue on a temporary basis. Let's say if we start in the month of June, for 2-3 months we'll do, or 4 months we'll do, and once the two-wheeler is back, we may slowly pull out of gold loan. Another way is to go and buy a gold loan book with someone. I mean that also would be additional revenue for us because we have got credit limits with us right now, and it is idle. And so how we can use that and buy out something from the market. So there are a lot of options to run the organization and to continue to have the business continuity plan. I think there are various options that is there with us. We have kind of indicated that a pure strategy is not yet ready. We'll be happy to give you whenever we are ready with that. But as of now, cross-sell two products, gold loan and general insurance. Gold loan is happening for the existing customer of MCSL.
Yeah, and one thing maybe just to add to what
Mr. Valecha, may we please request you to please return to the queue for your follow-up questions?
Sir, I've already finished my question. Let me complete, then I'll come back.
Okay.
So just on the same slide, sir, I'll come back just after this. So you mentioned that you intend to increase your fixed deposit base to 700 crore. So given that in this kind of environment, earlier you stated that you will be raising it through the parent. Now, how will you go about raising the fixed deposit in the current environment?
No, what we have said in the current environment means people are looking at opportunities for investment, and we have not said that we will be raising it to 700 crores. What we have said is the permitted level is about 700 crores, which is 1.5 times the net worth, the net owned fund, and current level is only about 45 crores. So we would be doing a massive campaign. We would definitely be looking at the flagship company through those branches. Customers can go and hand it over. We would be engaging our own employees when they speak to the customers to get them to invest in the fixed deposits of the company. So we are looking at what we have said is we are looking at a massive campaign. In fact, we would hopefully come with an advertisement in the next couple of 2-3 days. So we are looking at it in a big way. So the intention of doing it is you get the funds with you for a minimum period of 1 year. You get funds at a much cheaper rate. The bank interest rates have gone down. If we can do something better, customer finds it useful. And we can do it only in the state of Kerala. The customers are loyal customers for whom Muthoot is an household name. So most of them would be very eager to come and invest. So we are looking at it as a big opportunity. And when we have such a big army of people and so many branches spread across the state, it would be natural for us to think of utilizing it to the maximum.
Okay, sir. I'll come back in the queue.
Yeah.
Thank you. Next question is from the line of Prashant Sridhar from SBI Mutual Fund. Please go ahead.
Yeah, good afternoon, sir. Just one small question from my side. You had mentioned some 10,000 vehicles were repossessed. I missed over what time period these were repossessed, and if you could just talk a little bit on the secondary, the sort of the resale rate and recoveries you're seeing on these repossessions.
The 10,271 number that we mentioned about was for the year 1920. The previous year figure was from 8,000 or so. So that's for 1 year. Now, the normal recovery is about 45 to 50%. Some vehicles you possibly get more, some you get less, but on an average, it is about 45 to 50%.
Okay. Yeah. Thanks, sir.
Thanks, sir.
Thank you. Next question is from the line of Resham Jain from DSP Investment Managers. Please go ahead.
Yeah, thank you. So a couple of questions. So one is in terms of collections now, the branch-based collection versus the online collections, the drive which has started, I think, 2 years back. In the last 2 months, has that number significantly increased?
Hi, Resham. Vinod here. In the last couple of months, the online collections have increased, but then with the branches being there are many customers actually walking in and making the payments in the branches. The number of, in fact, customers who actually walk in and make the payment. In fact, in this month itself, at the last count, the number of people who went in and made the payment at the branches was close to about 85,000. So the online is also increasing on a day-to-day basis. In fact, after we came up with our own app and then we tied up with Paytm also, a big chunk is coming. But then, in fact, between Jan and May, if you look at it, it has increased about fivefold. So there is a
now, for example,
4,000 from app and 17,000 from Paytm.
roughly about 20,000.
Out of 7 lakh customers.
Yeah, out of the 7 lakh customers, but out of the 290,000 odd customers who have paid so far, which is maybe on an overall basis it looks small, but then the way what we are trying to say is this is a number which is increasing. It has increased fivefold between Jan and May.
So what I was just saying is that out of the total customers which are paying, only like just 5-7% customers are paying online mode. So 90% are paying through transcripts.
90% would be paying through branch, or they'll be paying through physical visit of our team. So it's a mix. It is not 100% cash. It could be various other means. It is not pure cash.
Resham, you are talking about what is the scenario prevailing today?
No, I'm just saying today what is that percentage number?
Normal.
What should be the competition number? If we talk about the largest player in the two-wheeler, what will be their numbers in terms of the online collection? How are we placed versus them?
See, when we talk about payment outside NACH, that is outside, so we were talking about X bucket. In terms of collection, we call it X bucket. That is, if you have put 140 checks have bounced, that is called X bucket. Okay. Now, these collections that we are mentioning is about the cases which has got bounced. So in the industry also, not more than 10-15% would pay through digital means. This X bucket gets allocated to agencies. It gets allocated to telecalling agencies and things like that. There are various means and methods employed by different companies in a different way, but most of them are agencies. For us, we say we are fortunate that we have got MFL branches. So customers, when we call them, your check has bounced, they are able to identify which is the closest branch and then they go and pay there. So because that accessibility is there and customer has the confidence that if I go there, I make the payment, I'll take the receipt and things like that, it is more convenient to him. Compared to, and then we have our in-house collection team also. So compared to our competitors, they don't have all these facilities and they don't take collection through branches. They take 100% collection through collection agencies. And that's one of the things that puts us differently, and a digital channel is one of the channels to get these customers into paying from their home. So this is a start, and as we go forward, it would increase. But around 10 to 15% is something which is very good as far as two-wheeler industry is concerned. As far as focus on common man is concerned, these are very good numbers. 10 to 15% is the right number that we should look at.
Okay. And sir, my second question is on fixed deposits, public deposits, which you talked about. So there you mentioned that you are going to run a massive campaign and stuff. So I'm sure you will have budgets in mind. So what kind of number you're looking at from this source, and what is the cost differential between your normal liability sourcing versus this?
Sorry, Resham, is it possible for you to just repeat it? It was not very audible, I would say.
No. So what I was asking is that the public deposit which you are trying to source, what kind of budget you have in mind? Because you said you will be running a massive campaign to get this money. And what is the cost for it? And because you have already planned for this campaign, what kind of amount you are looking for from this source?
See, like while we said that we can go possibly up to 700 crores, we would be comfortable if we can possibly be at about 300-350 crores also over the next 6 months or so. And that's number one. Your second question was on what is the pricing for that. Our price today is in the range of 7.5% to 8%, which we believe is substantially better than what they would get from any other bank. And since we can source it only in Kerala, and in Kerala, Muthoot is an household name, that kind of loyalty and that kind of loyalty both to the brand and to the Muthoot family, that is seen in most of the, I would say, people living in Kerala. So that is a very big plus which we have.
Okay. And have you already seen in the last 2 months, because you said you'll be leveraging your people's strength to get this money. So have you already seen in the month of April and May this number going up?
No, Resham, we have just started finalizing the plan. So we should possibly start it in the first week of June.
Okay. Perfect. Thank you very much. Thanks.
Thanks, Resham.
Thank you very much. Ladies and gentlemen, in order to ensure that the management is able to address queries from all the participants, please restrict your questions to 2 per participant. Time permitting, you may return to the queue for your follow-up questions. The next question is from the line of Saptarishi Chatterjee from Centrum PMS. Please go ahead.
Yes, sir. Thank you for the opportunity. So my first question is, what is our market share in the top 3-4 states that we are operating in? And when we are saying in our expansion, we will go to more tier 3, tier 4 cities, and therefore, currently, what kind of customers are in our existing book? What proportion of customers are in new to credit, and do we foresee that this proportion will go up as we expand?
So, in our leading markets, let's say Kerala, Karnataka, we would be at least around, let's say Kerala, we are the market leaders. We have more than 30% market share. We have maintained that. Karnataka is another big market for us. We waver between 10 and 15%, but there also we are number one. AP, Andhra Pradesh, that is also our prime market. We are around 15%. We entered East a couple of years ago. In West Bengal, we have a market share of 8 to 10%, which is a big move that has happened for us from the expansion perspective. So wherever we have gone, tier 3, tier 4 centers, we have been able to make a good dent. We have been able to grow there. You asked about the customer segment. We cater to various customer segments through our different schemes. Ladies only scheme is a very popular scheme, which is a special scheme for the ladies who are eligible for two-wheeler loan. Besides that, in tier 3, tier 4 centers, specifically we have property-backed product. We have salary-backed product. We have no income proof customers. We have 0% scheme, 0.66% scheme for customers who is going to buy cash. So there are various schemes. But predominantly it is for agriculturists we have specific schemes. So depending on the area and the segment of customer, we have a scheme, but specifically catering to the common man.
Currently, what proportion of customers will be new to credit for us in existing book?
New to credit would be about 40 to 50%. Industry is about, last my assessment was about 65%, 65-70% in two-wheelers, which should have come down by now. Let's say it should be around 60%. We are at 40%, 45% like that.
Okay, sir. My second question is on the asset quality. When we are seeing the zero DPD, before COVID only, we are seeing from Jan to Feb, zero DPD is increasing. What can be the possible reasons for that? And what is zero DPD number, latest number, maybe mid-May or something like that?
Which was disturbance?
Can you repeat the question? I think
there was some audio disturbance in between. We could not get you fully.
Sure. So basically in the asset quality, when I see the zero DPD number, before COVID only we are seeing from Jan to Feb a surge in the zero DPD. So what could be the possible reasons, and what could be what are the latest zero DPD number as on maybe mid-May?
The DPDs were blocked after 29th of February. So people who have not paid, most of them were, I think on a suo motu we had actually extended moratorium to them. But if you ask, normally zero DPD numbers are at about 80-82% of our total book. 80-82% of our customers.
Okay. Thank you so much.
Thank you. Next question is from the line of Pranav Mehta from Value Quest. Please go ahead.
Hey, good afternoon, sir. Thank you for taking my question. So just couple of questions. So one, first one is reported gross stage 3 number for this quarter. Does this include any benefit of moratorium given or not? That is the first question. And secondly, so we earlier, pre-COVID, we had plans to raise equity capital during this year. But obviously now the growth numbers will be much lower. So in the revised scenario, do we still plan to raise capital during this year, maybe as a conservative step to prepare for any eventual losses that will come because of this situation? Yeah, thanks.
On the stage 3, whether it is after considering the moratorium, yes, it is after considering the moratorium. Because after 29th of February, the DPDs were blocked and without any rolling forward of the DPD. So we have adopted that, because that is what was permitted by RBI. On the second point is on the equity raise, may not be the right time to actually look at an equity raise. So I think we would possibly need to wait for things to get somewhat normal before we even think about it. Right now there is nothing on the agenda.
Okay. Thanks a lot.
Thanks.
Thank you. Next question is from Kashyap Zaveri from NK Investment Managers. Please go ahead.
Hello.
Yeah. Hi, Kashyap.
Yeah, hi. I have just one question, and as sort of a playthrough to that, just noting some numbers. If I look at our market share over last about 7-8 years, we were at a low of about 0.7% of the market, somewhere around about 0.9% of the market at about FY15. We could take it up as about 1.7 by the time we reached FY18. FY19, I would probably say that we had floods in Kerala, which is our main market, so probably in that particular year we might have lost some share. So it was about 1.7 to 1.55, and this year we have just clawed it back to about 1.61, despite the fact that our home market hasn't done as bad as what it did because of the Kerala floods last year. So what's after such a remarkable performance in terms of market share, what's been lagging now for almost about post the Kerala floods, almost about 5 quarters that we have seen. And given the fact that in some of the markets like West we have about 0.5%, in North just about 1%. If I look at East, just about less than 1%. So what's sort of holding us back?
So Kashyap, Madhu here. As I said in my opening statement that post ILFS and then the two-wheeler industry going down, I think to some extent we had initiated cautious approach. And if you would have attended our various quarterly calls, I was very specific that we have witnessed few of the NBFCs vacating the two-wheeler market. It was very much available for us to go and grab that, but that was not the customer segment that we were looking at. So there were opportunities, but we really had a sense of caution in how much and in what level we'll expand or add more market share as far as our existing markets are concerned. To some extent, it really was very important, because if you look at even before pre-COVID, if you look at the way economy was behaving, and I always tell, and as an analyst, you people also should always link this with the GDP, how the GDP is moving, and that's how the retail finance moves. And I was telling that because GDP is slightly going down, that was around Q3. I mentioned that we need to be a bit cautious because the cash flow of the customers are getting impacted. You have to be very careful. So out of caution, out of conservatism, we would have been very clear, which markets to grow, which markets to restrict, which markets to contract. And if you recollect, I had given certain figures on green, amber, red. The green markets, we have shown considerable growth compared to the market. In fact, those markets, the industry degrew, but we have grown. In amber market, we maintained our market share. In the red markets, we have kind of, pulled out, or we reduced our numbers so that, we'll bring back the collection on track. This is how retail finance actually functions. You need to look at, from end to end, how the portfolio behaves, look at the areas of your strong points, play there. And sometimes you have to, go conservative. So last call also I had mentioned, and even during the H1 call I had mentioned about green, amber, red, how we select the market, how we select pin code wise where we'll focus. So there are times when you have to take certain calls and be conservative. Don't chase market share. Wait for positive signals, and positive signals is definitely how that signal is going to improve the cash flow of the common man. During the start of this call, I mentioned how the common man's cash flow would improve with this COVID. People going back to their native place, they'll get back faster. Being at native place, they'll have a lot of other advantages. There are a lot of government sanctions, there are government benefits that is coming to them, which would help them, come back to their normal lifestyle. So once we see certain indicators which is showing that yes, customers' cash flow is going to improve, then you start, increasing your market share. And I have always said that whenever we'll feel that the market is right, MCSL would be the first company which would aggressively grow its market share. I have made this statement many times. So sometimes I would request you guys to kindly bear with us when we take such calls, because that's how the retail finance functions. You have to be very careful. Otherwise, there's a saying, "Saudhani hati or durghatna ghati." So we keep on having that compass in front of us.
Okay, so as a data point, if I were to look at probably us getting back to that journey of as we saw in past, from let's say 0.9 to 1.7, broader risk averseness from the lender side reducing, and on the broader economy side, should one look at more towards the cash flow from the rural point of view, or from probably a semi-urban point of view?
It is you should look at your market, which market you are operating. A, B. Let's say, for example, now there's a bumper agriculture output, okay? And few states have clearly shown that these are the areas where there's a bumper output. So my team tells me that these are the areas which is green to do business. Okay, and then I look at my portfolio. How has historically my portfolio behaved there? My portfolio is red, amber, green, green, green. If market is green, my portfolio is green. I'll put huge campaign, huge sales push there and increase my numbers. I'll increase my manpower there. So East was one of the markets like that. Unfortunately, besides lockdown and whatever has happened there, I think we'll bounce back there as well. But you need to look at specific markets and how the cash flow. So it could be rural, Agriculture basically, semi-urban, yes, the level of employment and the local economy, how it is performing. We have seen different states having different problems but different good things. Karnataka is one of the states where we had been very steady despite floods and things like that. Very steady state. AP had been a very steady state for us, like that. Kerala, of course, after the flood we bounced back within a month's time. Within 45 days time, we bounced back after the floods. So different state has given us different flavor, but at the ground, yes, look at your customers, look at your market, and then look at your historical portfolio, how it has behaved, and then take a call. So that's why I said we go up to pin code level, how the market is behaving. It is not just that one state is doing very well, so there would be a blanket strategy there. No, it is not like that. It is micro market approach.
Okay. I have further questions. I'll get back to you. Thank you.
Thank you. Next question is from Vikas Sasturi from Focus Capital. Please go ahead.
Hello.
Yeah.
Sir, what has been your yield for the last financial year? And the second question is, could you throw some light on the asset liability right now, sir?
The yield for the last financial year has been on an overall book. On an overall book, it has been in the range of about 21-22%. And on the asset liability, I would say that basis the last report submitted to RBI also, we are not having any negative mismatches in any of the buckets. And we are pretty confident that it will continue this way. In fact, the new sanctions that we are expecting that to be for long term. And that should help us improve the ALM picture even further.
Okay. Sir, when you say in every bucket, you mean up to 1 year or even beyond 1 year, sir?
Beyond the 1 year, I would say beyond the 3 to above 3 years, there is a bucket, right? Beyond the up to 3 years, we don't see any issue.
All right. Sir, it would be just a small suggestion from my side. If you could just add the ALM also to your very detailed presentation, it would be very helpful, sir.
We would try doing that from the next time.
Thank you, sir.
Thanks, Vikas.
Thank you. Next question is a follow-up from the line of Nikhil Valecha from Sundaram Mutual Fund. Please go ahead.
Hi, sir, in the Western market where we are already seeing some spike in the NPA,
Unfortunately, and we have hired good professionals there, both in sales and collections. I think once the coronavirus threat is over, we'll have the strategy back there. Maybe H1 will come back and tell. Plus, we have a franchisee model working there. That also with very almost zero investment, we are able to reach out to a big geography. And we have a loss cap agreement with them. So a lot of models are being worked out there, which would help us to tap that market. It is a market which we definitely don't want to ignore. But we'll work in a way where we don't land up with the same kind of portfolio that we landed up earlier.
Okay. And in your press release, sir, you mentioned that you provided roughly 8.6 crore due to additional life insurance fee which you collected, and now RBI has now disputed. So can you just explain what was that? I've never heard of such thing before.
Maybe we will elaborate on that. For the customers who are borrowing from us, we give them the option of opting for a life insurance cover for the tenure of the loan. So let us say if it's 2 years or 3 years, depending on that, we have a fixed price, let us say X 500 rupees for 2 years, 800 rupees for 3 years. And at the same time, we have got a normal PF also, processing fee also. So if a person says that he wants an insurance cover, if his loan is for up to period up to 2 years, 500 rupees is added. If it is 3 years, 800 rupees is added. The purpose of doing it is the age of the customers vary, and let us say it could be anything between 18 and 65. So the insurance cost of the fellow will keep changing. And when you make a payment to the insurance company, you would be paying based on the age of the customer. At the ground, we cannot have different rates floating around because the counter sales executive, he has to finish one customer, get on to the next customer. He has to move pretty fast. So that's the reason we have given him a standard pricing. Now, obviously, it covers the pricing, includes the cost of the premium. It covers the time taken by the counter sales executive to convince the person to visit the customer at his place and see what is there. Make the premium payment, hand over the documents separately. Then separately, God forbid, there is a death to handle the processing of the claims, etc., etc. So obviously there was some bit of margin there, and what has happened was RBI view was we respect that view, but while we dispute it, we respect their view. But the view was that no, it should be you cannot have anything extra over and above the insurance premium, and which is where they said that no, X amount is what you have collected extra, that needs to be paid off. While we have gone to the authorities for a adjudication, and we have actually put up our entire detailed submission running into several pages on why each of the things are being done. Out of abundant caution, we felt that it is necessary that whatever income we have accounted on account of this, we need to make provision for it. And that is why we have made this provision.
Okay. And sir, for PTC and DA, have we achieved moratorium in the second round of moratorium? And also, if you can give some color on the DA and the securitization market. Because I believe that given the weak collections outlook, I think the lenders would also be slightly risk averse to do further deals of such types.
For the extended moratorium, we have not approached anybody. Even the last moratorium which was there from 1st March to 1st May, while we sought moratorium from the investors of DA and PTC, our statement was very clear that whatever is getting collected, we would be paying. And that was agreed to by all the investors, and that is what we have been doing. In fact, the collection for the month of May would need to be paid in the month of June. We would want to wait for the first 1 week or 10 days of June to see how things stack up, what happens on the ground, how the people react to the moratorium. So far, we have not seen anything negative, because in the last 4 or 5 days itself, we have collected close to 10 crores from our customers, which is what we would have normally collected in a normal month. So we believe that things are coming back to normal, and with the lockdown restrictions getting lifted, we believe that while the moratorium is there on paper, most of them would not seek it, and collections would come. But then, I'm just repeating, saying that maybe we would need to wait till the 10th of June or so, for at least the first week of June, to decide whether we need to go and seek an extension from the PTC and DA investors.
Okay. Thanks a lot, sir.
Thanks.
Thank you. As there are no further questions, I now hand the conference over to the management for the closing comments. Over to you.
I think it was a good 1.5 hour session. I think we have been able to address most of the queries raised by all of you. and we believe the company and the group believes in total transparency. If anybody feels that some of their queries which they wanted to ask has been left out and they need to come back, they are more than welcome to get onto a call with us directly, and we are more than happy to address each and every query that they would have. We are sincerely hoping that on the behalf of the company, on the behalf of the group, and on the behalf of all our investors, things improve sooner as fast as possible, and maybe the next quarter would things return back to normal. We have our own Onam festival next month. Ganapati happens in the next month, and then a quarter after that, a host of other festivals, including Diwali and Christmas comes up. So we are hopeful that things improve soon, and it is we will go back to where we were pre-COVID, or maybe definitely I would use the word and say pre-ILFS days, and we can show bigger numbers as we go forward. Thanks to everyone.
Yeah, thank you, Vinod. On my closing comments, I think minus two-wheeler sales, our faith in the market, our faith in the way things would move is very strong, in the sense that we are very confident in terms of how we are handling our lockdown. We have set up priorities. We are very confident these are the right things to do right now. I mentioned that redeploying our entire manpower, engaging them very positively and on the right cause. That is, ensuring collection happens, ensuring be in touch with the customer. Not even a single customer would be left out where we have not reached out to them very politely, very nicely. And I said we'll do good amount of cross-selling, because customer may not be mobile so much, but we'll reach out to them with the requisite product which he needs and which we are able to deliver to them. So we think that we have put the right things in right place for the period of the lockdown. In terms of our customer base, we are very confident about common man. They'll bounce back. Things would come back to normal as the lockdown eases out. We are seeing it very positive in the sense that our on-ground understanding of how customers are coming back and they have restarted the way they were earlier is very positive. We have very high confidence that things would bounce back sooner than what we are thinking. We mentioned about giving an abundant caution in terms of high provisioning that we have given. We had that scope this time. We did it. It is a very positive sign for us. I mentioned about a digital piece that initiatives related to that. We'll continue with that. We have seen a lot of improvement in terms of customers coming out and paying through digital means. I think there's a lot of positivity that would happen. We saw whatever low we could see, but a lot of positive things would happen. Vinod mentioned about festive season that would start from the month of August, as soon as the moratorium period is over. My personal estimate about two-wheeler industry is that Q3 it would definitely be closer to last year Q3. Q4, my expectation is Q4 would be much more than what was average Q4 of last couple of years. I'm seeing that Q4 is the time when two-wheeler industry would bounce back, and next year it would be business as usual in terms of all India sales. So from our side, we are very positive about things, how it has panned out, and I wish all of you a safe time, especially people in Mumbai. I wish you to stay safe, and I pray that sooner or later we can catch up. And if there's any other queries, any other thing that you want to understand from us, from our financial perspective, or from industry perspective, or from specifically with two-wheeler perspective, please reach out to us on our numbers or on our email IDs. We'll be very happy to respond to you back at the earliest convenience. Thank you very much. Over to you, Bhavik.
Yes, sir. Thank you all for participating and thanks management for taking the time out.